We will begin with income statement. Yeah, yes, please. Shall we begin with income statement? So far, we discussed about which one? Balance sheet. Balance sheet gives you, assets and liabilities on a particular date or throughout the year. Balance sheet, do you prepare throughout the year or at the end of the year? At the end of the year, okay? Or on 31/12, we prepare a balance sheet. In US, at the end of 31st December, they prepare the balance sheet. Okay, on 31st December, these are my assets, these are my liabilities. Otherwise, balance sheet is like a picture, a photograph. A photograph means taken at a point of time, taken at a point of time. Whether the same scenery will be there on the next day. Today I show this is my asset, this is my liability. Tomorrow, whether the same asset and liability will be there, it will change or it might change. It is changing throughout the year. It is changing throughout the year, but balance sheet reports at a particular point of time. But income statement is like a videotape. Income statement is like a videotape. It is prepared for a year. That's why we put P&L account for the year ended. For the year ended means it is prepared for 12 months. Okay. But balance sheet, do you put for the year ended or as on? What is the title you give? Balance sheet as on this date. So that gives at a particular point of time. But whereas income statements are prepared for a particular period. Normally the period of income statement is 1 year. Normally the period of income statement is what? 1 year. How to prepare income statement? This is how they prepare the income statement in US. What is the first one? Revenue. What do you mean by revenue? Income from by doing business. Example of income from doing business: cash sales, credit sales, commissions, and other trading incomes which are being earned from the business. Minus cost of goods sold. What do you mean by cost of goods sold? That opening stock plus purchases minus cost of goods minus closing stock will give us what? Cost of goods sold. Sales minus cost of goods sold will give us what? Gross profit. Then deduct other operating expenses like selling, general administration expenses. You will get which one? Operating income. Include dividend incomes, interest incomes. We would have made investment in shares, debentures, bonds. We would have made investment. From that, we will earn income. That income you can include. Then, for borrowing, we would have paid money. Interest. That also you deducted. Sometimes there may be non-operating gains and losses. Understand the difference. Pay attention. Sale of products. Is it an operating item or non-operating item? Operating income. Rendering of services. It is also which one? Operating income. What about trading commission? It is also which one? Operating income. Government grants. For example, during COVID, the government was sponsoring certain private organizations to manufacture masks, to manufacture certain medicines. The government will contribute money, you make the medicine and give it to the people either free or at a subsidized rate. Okay, so the government grants are granted for manufacturing the product and giving to the poor or needy. Or for example, during certain festival seasons in India, you can find free products are being distributed. How do you get the free product? Government gives money to a private organization. They manufacture, they deliver the product to the end users. So what about those government grants? They are also which one? Operating income. Clear? Instead of selling product to the customer, you are getting a government aid. That is also which one? Operating income. These are all recurring in nature. These are all which one? Recurring in nature means again and again they will come. Let's assume during the year I had a building worth $350 million. Okay, this was recorded in books at $350 million. It was sold for $275 million. Here there is a loss. Here there is a loss on sale. What is the loss on sale? $75 million. Huh? What is the What is the loss on sale? $75 million. This is one case. Second, I had a land recorded in books at $200 million, sold for $450 million. Here there is a profit on sale. What is the profit on sale? $250 million. Now, this building sold or this land sold, is it your main business? Is it your main business? Respond. I manufacture and sell products. Okay, building sold for a loss, land sold for a gain. Is it your main business activity? No, that is not. For example, I sell this furniture at a loss, or I sell this laptop for a profit. Is it my business activity? No, that is not my business activity. These are all called as non-operating items. These are all called as which one? Non-operating items. Let us assume your company deals in manufacturing and selling electronic goods. Clear, sale of products, rendering services like after-sale services. Okay, buying and selling electronic goods, government grant for manufacturing electronic goods. All these are which incomes? Operating incomes. And if you sell your company's building for a loss and company's building for a profit, is it connected to your main business? What is your business? Electronic goods. Earlier, is it connected to electronic goods? Buying and selling building, is it electronics business? No. So simple. Please you have to understand. Please note revenue. Revenue comes from a recurring activity. Revenue comes from a recurring activity. Gains come from a non-recurring activity. Okay, this we call it as non-operating incomes. Because it's not a regular income from the business. It is not coming regularly. Will you sell every year building? Will you sell every year land for a profit? No. But whereas will you sell products every year? Render services, get trading commission and government grant? Yes. Operating income is the main objective of the business. Operating income is the main objective of the business. But whereas gains are from which one? Non-operating activity. Then same way, expenses. Expenses are spent for recurring. Okay, like purchase of goods, payment of salary, payment of rent, we call it as which one? Expenses. Same way, losses are which one? Non-recurring activity. They are called as non-operating expenses. They are called as which one? Non-operating expenses. That is what is mentioned over here. So what do you mean by non-operating gains and losses? Simple. Gains and losses from a non-recurring activity. Then income from a continuing business. Then provision for tax. Provision for tax, income from continuing operations will come. Then discontinued operations. What do you mean by discontinued operations? During the year, you discontinue some business. For example, let us assume I was dealing in 4 products, A, B, C, and D. I am finding it product D is I'm not comfortable. I'm going to discontinue the product. So A, B, C income, we'll call it as which one? Continuing operation or discontinuing operation? Continuing operation. The income from product D is continued or discontinued in the current year. Discontinued in the current year, that you should disclose separately. Okay. Gain from the operation from discontinued operation. If there is any gain or loss on disposal also you have to give. Income tax benefit or income tax expense also you should give. Then income or loss from discontinued operation will come. Then finally you will arrive at which one? Net income. Okay. How to prepare income statement? Take revenue minus which one? Cost of goods sold, you get which one? Gross profit, deduct usual working expenses, you get operating income, take the interest and dividend incomes, take the interest expense. If you find any gain or loss on sale of assets are there, this will give us what? This is segment 1. What is segment 1? Income from continuing operations. Then provision for tax, because when you earn income, you have to pay tax. This will give us net income after tax, net income after the tax. During the year, if you discontinued any operation, disclose that separately. Gain or loss from the discontinued operation. For example, 3 business, A, B, C. It will come in the first part or second part? A, B, C will come in the first part or second part? First part. It is continuing or discontinuing? Continuing. So the first 3, A, B, C, you will disclose here. Then product B, as I said, we are going to discontinue the operation. That will be disclosed separately. How to disclose it? What is the income from the discontinuing operation? Is there any income tax benefit or loss? What is the net income or loss from discontinued operation? You add these two, you will get net income. This is income from continued operation, income from discontinued operation. Add up, you will get which one? Net income. This is called as a multi-step income statement. It will be called as which one? A multi-step income statement. I have explained this already. What do you mean by revenue? Revenue is nothing but what? It is from your main business activity. For example, listen, let us assume you are running a textile showroom, multi-branded textile showroom. What and all will be your revenue? Sale of products, credit sale of products, sale of all types of dress materials. Sometimes you trade on commission basis also. What do you mean by trade on commission basis? You buy the product and sell the product on commission basis. That also will be included. So all the incomes, all the recurring incomes, we call it as which one? Revenue. Revenue will be recognized. When to record the income? When to record the income? Simple. When you have the right to receive the income. Pay attention. I'll give an example. Please copy this. Are they getting? Recognition of revenue. Pay attention. Let us assume you are running a furniture shop. You are running a furniture shop. On 10th January, customer came for inquiry. Okay, on 15th January, okay, the customer gave the order of the product. On 20th January, the customer made an advance payment of $4,500. On 28th January, we have given invoice to the customer, that is bill to the customer. On 3rd February, product is manufactured, is ready. On 10th February, the product is delivered to the customer. On 15th February, the product is installed at the customer place. It's like centralized AST or something like that. On 20th February, the customer made the balance payment. Don't copy this, wait. The customer made the balance payment of $3,200. When will he record the income? What is income from the customer? 4,500 plus 3,200. What is the total income? 7,700. So we prepared the invoice on this date for $7,700. My question is, when will he record the income? At what point the income is earned? Is it on inquiry or order or advance money is given? When you prepare the invoice, or when the goods are manufactured, or when the goods are delivered, or when the goods are installed, or when you receive the final settlement? When income can be recorded? Books. Simple. Final settlement, which means if the final settlement is not made, you will not record income.
So on 28th Jan,
on 20th Jan, we just get an advance payment.
28th, when the invoice is
let us assume invoice is prepared on giving the order. On 15th January itself, we prepared the invoice. And on 20th January, the customer makes an advance payment.
Yes.
Now what will happen?
So we will make them as a receivable, means debtor.
When will you call it as debtor?
When they are actually they are due to pay to us.
So on 15th January, is there a due to pay to us?
Yes, sir.
No. Invoice is only a paperwork. Okay. According to Federal Accounting Standard Board as well as ASC, revenue can be recognized when performance obligations are satisfied. Not created, or satisfied. Which means when risks and rewards are transferred to the buyer. Risk of using the good and reward means the benefit of using the commodity, both are transferred to the buyer. You can record the income. Tell me at which point this happens.
15th February.
15th February is the point at which both are happening. Clear? After 15th February, risk, if something happens like damage, buyer is responsible. Okay. After 15th February, reward of using the commodity also is with what? Buyer. Otherwise, my performance obligation is over. When my obligation is over? When I gave the delivery of the goods, when I gave what? Delivery of the goods and what? Usage of the goods. So, the income should not be recognized based on invoice or advance money or when you get the balance payment. Let us assume at the time of invoice itself, customer has paid full money. Since we received money, can you record income? No. So income should not be recorded based on invoice or receiving the money. Income should be recognized based on what? When you satisfy the performance obligation. Simple. When risk and rewards are transferred to the buyer. Note this. Recognition of revenue. Please note this. This is the most important IMA question. Conceptual. Yes, please.
So on raise.
The standard is to still that just raising the invoice alone, you cannot record. I mean, you cannot record income. If you raise the invoice, it's just a paperwork. Don't pass journal entry. That is a mistake. Number one. Number two, you may get an advance money also. Just take it as an advance from customer only. Don't take it as income. Income can be recognized only when this is satisfied.
But JVs can be passed, correct?
The entry can be passed like an advance money.
Okay.
Take up this. So income can be recognized when performance obligations are satisfied. Certain examples. Sales subject to delivery by seller only after delivery. Sales subject to installation by seller only after installation. For example, the seller has said we will deliver the AC and we will install it. Only after the installation is complete, then you can recognize. Sales subject to approval, or you can say rejection, or you can say option to return. It's applicable to all Amazon and Flipkart sales. 10 days replacement, 10 days return policy. The goods are given to the customer today with invoice. Can you record that sales as income? No. Only after the set period is over or when customer approves. "10 days replacement policy" or 10 days return policy is given now. If the sale is made today, don't record the sale today. Record the sale only after 10 days. Record the sale only after 10 days. So what about warranty sale? Simple. Recognize income, but create provision for warranty. We are going to discuss this in separate way. When there is a sale made with warranty like 5 years, 4 years warranty, you will record the income, but you will create provision for which one? Warranty. Please note all these things. These are not the thing within the material. So I request you to note this as classroom notes. So if you are rendering services, either you can follow completed contract method. Completed contract method means only when the contract is complete, we can record the income. Okay, this is for all the job works contracts. Okay, proportionate completion method can be followed for all time-based work. For example, I have undertaken an interior decoration for your company. You have to pay me 5 lakhs on the completion of work. Okay, the income can be recorded only when the work is complete. Clear? I have undertaken interior decoration work. How much you will pay me? $5 lakhs. Okay, when I can record that income? Only when I complete my work. Okay, so for all the job works contracts, when the work is over, you can record the income. Okay, the customer may make early payment or later payment. That is different. You can record the income when the contract is complete. Then for all the time-based work, for example, I have undertaken maintenance services for your apartment or for your building or for your air conditioner. For 12 months, I charge some $2,000. 12 months like AMC, annual maintenance charges, I charge how much? 2,000. Okay, to maintain your house, to maintain your AC or to maintain some equipments, etc. and all. Now, within the current year, 3 months time is over. How many months time is over? 3 months time is over. 3 by 12 I can record as income for this year. 9 by 12 I will record as income for which year? Next year. For all time-based work, subscription services. For example, you are paying Netflix, Amazon subscription, Prime subscription for 1 year. Okay. How the Amazon will record the income? You pay 1,500, will they take entire thing as income? Let's assume a customer has paid on 1/10/2022. Let's assume let us assume 120 he paid for 1 year premium subscription services. It may be for Netflix or Amazon or whatever. How much he paid? $120. When he paid? 1/10/2022. When you prepare a balance sheet on 31st December 2022, $120 into current year, how many months over? October, November, December. How many months over? 3 months, you will take it as which one? Current year income. 3 months, you will take it as which one? Current year income. What about the remaining 9 months? What about remaining 9 months? You will take it as a current liability. Why? How much dollars you got? $120. Services are rendered for 3 months, which means how many dollars income you can record? $30 income you can record now. $30 income you can record now. Remaining 9 months, have you rendered services now? On 31/12. Whether services are complete or pending? Pending. How many months services are pending? 9 more months services are pending. So when the services are pending, when you take money from customer, that is called as what? Advance receipt from a customer. That will be taken as which one? A current liability. It's a very famous IMA question. Clear? A person has taken $120 for rendering services for 12 months. For how many months? 12 months. On 31st December 2022, how this will be treated? How this will be treated in books of accounts? Simple. This income will be recorded in income statement. And this 9/12 that falls in next year, it will be taken as what? Current liability in which one? Balance sheet. This is the correct option you have to choose. They will give you like 1/10/2022 for 12 months, $120 were taken. On 31st December 2022, the balance sheet is prepared. How it will be treated in books? They will give you option. A. Entire 120 will be taken as income. B. Entire 120 will be taken as what? A current liability. Option C. 30 will be taken as income. Then remaining 9/12, $90 will be taken as which one? $90 will be taken as a current liability. Like that, they will give you options. Okay. So rendering services for all the job works and contract works, you follow which method? Completed contract. For example, in an hospital, a patient comes and pays money for operation. For which one? Operation. When the income can be recognized? You paid advance money for operation. For operation, pre and post treatment, stay, etc. You paid about $5,000. Okay. When the hospital will record the income? Before the surgery or after the surgery? After the surgery. Because only when the work is over, then they can record the income. For all time-based work, we can record based on what? Proportionate completion. Okay. So that is about income. We had seen. What do you mean by gains? Income is from a recurring activity. Gain from an isolated activity, one-time activity. Okay. That is not from your main operation. That is not from your main operation.
So one doubt, sir.
Yes, please. Then, expenses are for which one? Expenses are for which one? Recurring activity, routine activity, purchases, rent, salary, like that. Losses, okay. Losses arise because of which one? Isolated activities like loss on sale of assets, like that. Clear? So unusual gains and losses should be reported separately. Unusual gains and losses should be reported separately. Listen, pay attention. In a particular year, pay attention. In a particular year, some goods were lost by fire. Some 1% or 2% of goods were lost by fire. Is it an unusual activity? No. If some portion of goods are destroyed by fire, you need not report it. Entire godown is destroyed by fire. Is it an usual loss or unusual loss? Unusual loss. Unusual loss, you should report to the shareholders. You should inform the shareholders why that loss has happened. Okay. There are about 50-60 machines. During a year, 2 machines got damaged beyond working condition. You cannot repair them. Will you report to the shareholders? No. If you run business, that will happen, routine. During a year, about 20% or 30% of the machine were lost due to fire accident or collapse of the factory. Will you report to the shareholders? Yes. Anything which is of unusual in nature, gains or losses, that must be reported. That must be reported. That's what. Unusual losses or gains of similar nature should be aggregated, combined in one line. Unusual losses should be represented as what? Separate line item, alternatively disclosed in the notes to financial statements. Clear? For example, pay attention. You are running a business. During a particular period, one employee met with an injury or accident, you paid some compensation. Should it be disclosed? Should I have to inform the shareholders about it? Just one employee met with an accident, you paid some compensation. Should it be informed? No. Okay, for a particular year, one floor was completely gone because of some fire or some accident. About 20-30 employees met with an injury or accident, you paid a huge compensation. Now, whether it must be informed to the shareholders? Yes. As a separate notes to accounts. What do you mean by discontinued operation? I told you, I'm dealing in 4 products. One of the product I'm discontinuing. What do you mean by discontinuing? Stopping it. How to stop it? Number 1, just close the business or sell the business to somebody. That must be reported separately. That's what. Discontinued operations must be reported separately. Any gain or loss on selling that business, income tax benefit or expense from that, and net income from discontinued operation should be disclosed separately. Clear? I must disclose continuing operation as well as what? Discontinuing operation, I must do it separately. Separately. Clear? Next. So these are the examples of which one? Discontinued operations. Okay, what is a discontinued operation? Okay. When it will be called as a discontinued operation? Number 1, you are planning to sell it. Or already sold it, or you are going to sell in piecemeal, or the sale will happen within 1 year. The sale will happen within what? 1 year, or already we have given a marketing, like for example, this business is for sale, like that we have given a marketing information that this business is available for sale, like that we have given that. Then all action plans are, ready for selling the undertaking. Clear? Once again? Okay. Management is committing to sell. What do you mean by management is committing to sell? Pay attention. I told you I'm dealing in 4 products. 4th product I'm not interested. So the management has planned the factory, the plant, the machinery, assets, liabilities, godown of product D we are going to sell. We made a plan clearly. That is first part. Second, it is available for sale. We have given a notice, we have given an advertisement that it is available for sale. Or we identified a buyer. A buyer will be there to take over the business. We identified a buyer. We are sure that the sale will happen within 1 year. We are actively marketing for a reasonable price. See, many people will be interested in selling the asset, but will not give a fair price. Clear? We are finding out a fair price for selling it. Then actions required to sell that is attained. That means the operation is going to be discontinued. Then already it is sold, or it is just sold or disposed in a long term way. For example, pay attention. How many products I am running? In this example, A, B, C. A is doing well, B is doing well, C is doing well, but D is not doing well. So what I am going to do? I am going to sell it. How I am going to sell it? I can directly sell it in the external market, or what I will do is, you are running product C and D. For you, product D is doing well. For me, product D is not doing well. So what we'll do? For you, let us assume product C is not doing well. We'll go for a spin-off arrangement, or we'll go for a exchange arrangement. What do you mean by exchange arrangement? I will take over your business C, which we are doing well, and you take over our business D, like that we will exchange. That is also called as what? A discontinued operation. So discontinued operation should be reported separately. Discontinued operation should be discontinued, or should be allocated or should be reported separately. What are the benefits of income statement? It evaluates the performance of the undertaking. We are able to predict, for example, last 5 years income statement you take and compare. First year, second year, third year, fourth year. You see the growth in sales, growth in profit after tax. It grows every year. It grows every year. You will be able to predict the performance in the future. Then you will be able to predict risk and uncertainty in future whether the company will be surviving or not. For example, a company's profit is stable for the past 5 years. What will happen to sixth year? A company's profit is stable for the past 5 years. What will happen in the sixth year? Either the same thing will continue, or you will improve in the future, or you will decline in future. Very difficult to perform or predict. Some companies, you find profits are gradually increasing. You can expect next year growth also will be there. Some companies, profits are fluctuating. Then it will be risky to invest in the company like that. You will be able to identify the risk and uncertainty by throwing what? Cash flows and paying attention. I'll give you an example. That is a limitation of the cash flow, this statement. Cash sales we made for $700 million, or what is the cash sales? 700 million. Credit sales we made for, let's assume $5,600 million. But in this we have collected only 3,000 million. Now, income statement, what will be recorded? P&L account, which income will be recorded? In the P&L account, which income will be recorded? Answer it. Cash sales 700 million, credit sales how much? 5,600 million. What is the total sales? What is the total sales? 700 plus 5,600. You would have prepared a P&L account earlier. Cash sales, credit sales, both are recorded. 700 plus 5,600, what will be recorded? 6,300 million will be recorded as income. But did you collect entire 6,300 million? What is income recorded in the P&L account? What is income recorded in the P&L account? 6,300 million. But we collected only how many million? This 3,000 million we collected and 700 million we collected. We collected only how much? 3,700 only is collected. Remaining and all is in credit. Remaining and all is in what? Credit. Otherwise, the income reported is not equal to cash. Income reported is not equal to cash. That is a problem of this income statement. Okay. So, a net income has a lot of number of assumptions. We make so many assumptions in calculating net income. Okay. For income, we work out only what? Okay. Based on accounting method. Okay. For example, let's assume we are going to prepare annual accounts. Let's assume you all paid the fees. You all paid the fees for the classes. Now, when will I take this as income? You paid the fees for classes. When will I take it as income? On the payment of fees, will I take it as income? Or after the completion of syllabus, I will take it as income?
After completion of classes.
After completion of classes. Now, if I want to overstate my income, what I will do is, on receipt it will be treated as income. On receipt it will be treated as income. I will include immediately as income. Then I will inflate or increase my profit. If I want to reduce my profit, what I will say? Just fees is received in advance from the student. I am yet to complete the syllabus. On the completion of syllabus only, I will take it as income. Like that, I will write the accounting policy. I will write the accounting policy. If I change the accounting policy, I can change the income. So the income reported in the P&L account can be changed, can be modified. That's what. Income affected by what? Accounting method that is used. If I follow on receipt, take it as income, income will be different. On completion of services, you take it as income. If I follow, the income will be different. Okay. Then income measurement requires what? Judgment. How much of depreciation you will charge on the asset? You work out, for example, how to calculate depreciation. For claiming depreciation, what are the things that is required? We want cost of the asset, estimated life. Estimated life.
Useful life.
Now this
Percentage.
estimated life, will it be accurate? You are buying a machine, you are estimating that the life will be 5 years. Is it accurate? Simple. If you want to charge more depreciation, you can say life is only 3 years. Okay. If you want to charge less depreciation, you can say that life is 10 years. So estimated life, I can estimate based on my own thinking. If I want to give more income, I will take estimated life as 10 years. If I want to give less income, okay, cost of the asset is 300 million. Estimated life is only 3 years. Where I will charge a depreciation of 100 million every year. I will understate my income, or I'll understate my income. That is a negative side. Clear? Income measurement requires what? Judgment. The judgment may be right or wrong. Then, any income that cannot be measured properly cannot be reported in income statement. Cannot be reported in which one? Income statement. Then, income statement is just going to record only which one? Reportable revenue and expenses. Certain things are not reported in the income statement. Certain things are not reported in the income statement. For example, quality of earnings, quality of the management, or ethical nature of management or board of directors. Okay, following laws or violating laws, those things are not reported in the management. And again, one more thing, income statement records income on accrual basis. Income statement records income on what basis? Accrual basis. Okay. Just note the limitations. One of the most important thing for examination. Limitations of income statement. Records on due basis. That is accrual basis. Which means real cash flow is not shown in income statement. Income or expenses can be overstated or understated by changing assumptions and principles. Quality of earnings. Quality of earnings are not reported. For example, pay attention. Last year, 31/12/2021, our sales was 600 million or 600 million. What is the financial year turnover of the last year? 600 million. We are about to close on 25th December 2022. On 25th December 2022, I find sales of the current year is only 550 million. What is the sales of the current year? Only 550 million. Will you do something or do nothing? 5 days more or 6 days more to close the accounting year. Last year, what was the sales? 600 million. On 25th December, just 6 days before the end of the accounting year, what is your sales? 550 million. 550 million. Now, if I close as it is, whether the management will question, yes, last year, what is your sales? 600 million. Current year, what is your sales? 550 million. Are you growing or declining? Are you growing or declining? We are declining. People will ask, shareholders will ask question. To avoid that, what I will do is, from 25th December 2022 to 31st December 2022, I will give an offer. Normally, we will give you 15 days credit period. Normally, we will give 15 days credit period. If you purchase for this 6 days, we will give you 2 months credit period. Will you buy it or not? Pay attention. What is the normal credit period given by the company? 10 days. But if you buy during the next 6 days, we will give you 2 months credit. Will you buy? Yes. Normal sales, what is the credit period given? 10 days. But for this sale, for the next 6 days, we are giving how many months credit? 2 months credit we are giving. Will it inflate the sales? Yes. Let's assume sales since we are giving this offer, sales for the next 6 days became like 80 million. Now, what is the sales I will report? 550 million plus 80 million. What is the total sales I will report? 630 million. Now, what I do? What I do here? Is it a real sales? Whether 630 million is the real sales? What is the fraud I do here? If I don't do anything, my sales will be reported as only what? 550 million. Since I give this offer, the extra sales of how much million is achieved? 80 million is achieved. So I show a sales of how much? 630 million, which is 5% more than the last year income. Now the customer will pay in regular term or after 2 months? After 2 months. Now this one is an overstatement of income. This one is an overstatement of income. That is what? Quality of earnings are not reported, and income or expenses allocation shall be manipulated. Income or expenses shall be manipulated. Sometimes if you are a dealer, your company will call and say, sir, this month target me to achieve. Please accept the sales, but you cannot pay after 2 months, 3 months, like that, they will bug you. Why? Because they want to achieve the target, they want to show the sales, they want to book numbers. So the numbers can be manipulated. The numbers can be manipulated like this. Real income is only 550 million, but they show an income of 630 million, which is not real, which is inflated number. Then next one is all incomes are not reported. All incomes are not 100% reported, and it is not providing a full disclosure also. These are the limitations of which one? Income statement. These are the limitations of income statement. Next, this one, statement of comprehensive income. It is a new topic that I will do in the fresh class. Because so far, at least whatever we learned, balance sheet or P&L account, these concepts already we know. Income, expenses, gains, losses, we know. But statement of comprehensive income, we will do it separately. Okay. Based on income statement, what kind of question can be tested? Based on income statement, what kind of question that can be tested? They can talk to you about what do you mean by income, what do you mean by expense, or what do you mean by gain, or what do you mean by loss? What is the advantage of income statement? What is the limitation of income statement? Based on this, questions can be tested. Based on this, questions can be tested.